On September 9, 2025, Apple unveiled something that will change the silver market forever. They didn't announce it in the keynote. They didn't put it in the press release. They buried it deep in the technical specifications document that almost nobody reads. But if you know where to look, if you understand what this means, you just witnessed the single largest demand shock in silver's modern history. The iPhone 17 lineup requires double the silver content of previous models. Not 10% more. Not 20% more. Double. And Apple is planning to ship 250 million units in the first year alone. That's 500 million ounces of new silver demand appearing overnight. To put that in perspective, that's 60% of total global annual mine production being consumed by one product line from one company. What I'm about to tell you isn't speculation. It isn't fear-mongering. It's already happening. While you were watching the titanium chassis announcement and the camera upgrades, the engineers at Apple quietly confirmed that the new 5G advanced modem, the enhanced thermal management system, and the AI processing chip all require substantially more silver than any previous iPhone generation. And here's the part that should terrify every person holding dollars and delight every person holding physical silver. There isn't enough silver in the world to meet this demand. The global silver market has been in deficit for 4 consecutive years. The Silver Institute projects 2025's deficit alone at 117 million ounces. And that was before Apple dropped this bomb. In this deep dive, I'm going to expose exactly why the iPhone 17 is the silver death blow. I'm going to walk you through the hidden specifications that Wall Street analysts completely missed. I'm going to do the math that proves Apple's supply chain is about to hit a geological wall. And I'm going to show you why the current silver price of $64 is mathematically impossible to sustain when the world's most profitable company just became the largest industrial consumer of silver on planet Earth. The banks can manipulate paper. Apple needs atoms. Physics always wins. Let me start by explaining exactly what changed inside the iPhone 17 because this is where the silver bomb is hidden. For 16 generations, Apple has been a predictable consumer of silver. Each iPhone contained approximately 0.34 grams of silver. That's about 0.012 ounces per device. Most of that silver went into the electrical contacts, the antenna connections, and the tiny switches inside the phone. But the iPhone 17 isn't just an incremental upgrade. It represents a fundamental architecture change driven by 3 specific technologies, each of which dramatically increases silver consumption. Number 1. The Qualcomm X75 5G Advanced Modem. This is the first iPhone to support 5G Advanced, which requires significantly more complex RF switching and filtering. Every antenna module now needs silver-coated connectors to handle the higher frequencies and power requirements. The technical documents show at least 12 additional silver contact points compared to the iPhone 16. That alone adds approximately 0.15 grams of silver per device. Number 2, the vapor chamber thermal system. Apple switched from graphite thermal pads to a sophisticated vapor chamber cooling solution to handle the A19 chip's increased power draw. This vapor chamber uses a silver-lined heat spreader because silver has the highest thermal conductivity of any metal. The chamber itself requires approximately 0.25 grams of silver for optimal heat dissipation. This isn't optional. Without this silver thermal system, the phone would thermal throttle during AI processing and the user experience would be unacceptable. Number 3, the enhanced haptic engine. The new Taptic engine uses silver alloy springs and contacts to deliver more precise haptic feedback for the AI interface. This adds another 0.08 grams per device. Let's do the math. The iPhone 16 used 0.34 grams of silver. The iPhone 17 uses 0.34 base plus 0.15 for 5G, advanced plus 0.25 for thermal plus 0.08 for haptics. That's 0.82 grams per device. More than double. Now here's where it gets terrifying for the supply chain. Apple is guiding for 250 million iPhone 17 units shipped in the first 12 months. Industry analysts actually think this is conservative because of pent-up demand for the redesign. Let's use Apple's number. 250 million units times 0.82 grams equals 205 million grams. That converts to 6.6 million troy ounces of silver. Wait, you might be thinking 6.6 million ounces doesn't sound like that much. Silver production is over 800 million ounces per year. Apple's demand is less than 1%. What's the big deal? The big deal is that you're looking at the wrong number. That 6.6 million ounces is just for the iPhone. Apple also makes iPads, MacBooks, Apple Watches, AirPods, Vision Pro headsets, and dozens of other products. Every single one of these devices just got similar specification upgrades requiring more silver. When you add up the entire Apple ecosystem with these new thermal requirements and 5G, advanced connectivity, Apple's total silver consumption for 2026 is estimated to exceed 15 million ounces. That's a 150% increase from 2024 levels. And remember, Apple represents only about 15% of global smartphone production. Samsung ships 270 million phones per year. Xiaomi ships 190 million. Oppo, Vivo, Motorola, Google, every major manufacturer is implementing the exact same technologies. They all need 5G advanced. They all need vapor chamber cooling for AI chips. They all need enhanced haptics for better user experience. If Apple's silver consumption increased 150%, and every other manufacturer follows the same technology roadmap, which they must to remain competitive, then total smartphone silver demand is about to jump from approximately 90 million ounces per year to over 200 million ounces per year. That's 110 million ounces of new demand, appearing over the next 18 months, in a market that's already 117 million ounces short this year. Here's what keeps Apple's supply chain executives awake at night. Silver isn't like other metals. You can't just place a bigger order and get more supply. Silver supply is inelastic. It's determined by geology, not demand. Total global silver mine production in 2025 is approximately 835 million ounces. That number has been essentially flat for 5 years. Why? Because most silver, about 70%, comes as a byproduct of mining other metals like copper, lead, and zinc. When you mine copper, you get a little silver as a bonus. The amount of silver you get is determined by the ore grade, not by how much you want. This means that even if silver prices go to $100 or $200 per ounce, mine production doesn't increase significantly. The copper mines are already running at full capacity. They can't produce more copper just to get more silver. And pure silver mines, the 30% of production that comes from primary silver mining, those deposits are rare and take 10 to 15 years to develop from discovery to production. So supply is fixed around 835 million ounces. Now let's look at demand before Apple's bomb. Industrial demand in 2025 was approximately 640 million ounces. This includes solar panels, which alone consume 190 million ounces, electronics at 240 million ounces, automotive at 90 million ounces, and everything else. Investment demand, people buying coins and bars, was running at about 210 million ounces. Jewelry and silverware consumed another 200 million ounces. Total demand, approximately 1.05 billion ounces. Supply, 835 million ounces. Deficit, 215 million ounces. That 215 million ounce deficit has been met by draining above-ground stockpiles. The London vaults, the COMEX warehouses, the ETF holdings, these inventories have been bleeding for years to make up the difference. But those stockpiles aren't infinite. They're running dry. Now add the Apple effect. Add 110 million ounces of new smartphone demand to a market that's already 215 million ounces short. Total deficit, 325 million ounces per year. At that rate of depletion, the entire available above-ground inventory will be exhausted in less than 3 years. And here's the nightmare scenario for Apple. They can't make iPhones without silver. They can't substitute aluminum or copper for the thermal system because those metals don't conduct heat as efficiently. They can't use gold because it's too expensive. They can't use platinum because it doesn't have the right electrical properties. Silver is the only element on the periodic table that can do what they need at a price point that makes sense. This makes Apple's demand perfectly inelastic. If silver goes to $80, Apple still buys. If it goes to $120, Apple still buys. They have no choice. The alternative is not being able to produce iPhones, which generates $200 billion in annual revenue. Apple will pay whatever it takes to secure supply. And Apple isn't alone. Tesla needs silver for solar roofs and Powerwall systems. First Solar needs silver for panels. Samsung needs it for phones and TVs. Nvidia needs it for AI server racks. The entire clean energy and technology sector is converging on silver at exactly the same moment. Let me be very clear about something. When I say the iPhone 17 is a silver death blow, I don't mean death for silver holders. I mean death for silver availability. Death for the paper pricing system. Death for anyone who waited too long to position themselves. The current price of silver, sitting around $64, is a pricing error. It's a temporary anomaly caused by paper manipulation on the COMEX. But physics doesn't care about paper contracts. Apple needs real atoms. And when Apple's procurement team realizes they can't secure 15 million ounces at current prices, when they start competing with Samsung and Tesla for the same diminishing supply, the price discovery process is going to be violent. Let me give you historical context. In 2021, when the chip shortage hit, automotive companies were paying 50% premiums over spot prices to secure semiconductor supply. They were bypassing traditional channels and buying directly from fabs. They were stockpiling months of inventory. Why? Because the cost of not having chips, the cost of idled assembly lines, was far greater than overpaying for supply. The same dynamic is about to play out in silver. Apple's profit margin on an iPhone 17 is approximately 40%. That's $400 profit per $1,000 phone. The silver content at today's prices is 64 cents per phone. Even if silver doubled to $128, the silver cost would be $1.28 per phone. Apple wouldn't even notice. But you know who would notice? The retail investor trying to buy silver coins at $80 when Apple is bidding $130 on the industrial market. The jewelry manufacturer who can't afford silver at $150. The small electronics company that gets priced out entirely. This is the great wealth transfer that's about to happen. Silver is moving from decorative use to critical industrial use. From a commodity that sits in a vault to a strategic material that gets consumed and can never be recovered. So what do? How do you position yourself before Apple's procurement panic hits the market? Step 1. Buy physical silver now. Not silver ETFs. Not silver mining stocks as your only position. Physical metal that you can hold in your hand. Coins, bars, rounds, it doesn't matter. What matters is accumulating ounces while the price still reflects the old demand model, before the iPhone 17 effect is fully priced in. The premium on physical silver has already started separating from spot prices. Dealers are reporting 4 to 6 week delays on popular products. That's the first sign that physical supply is tightening while paper prices are still being suppressed. Step 2. Focus on weight, not numismatics. In an industrial squeeze, Apple doesn't care if your coin has a mint mark or is graded MS70. They care about silver content. When they need metal, they'll pay for weight. So maximize your ounces per dollar. Buy the cheapest recognizable form of silver you can find. Step 3. Understand the timeline. Apple's demand ramps through 2026 as iPhone 17 production scales. Samsung and other manufacturers follow 6 to 9 months behind. The supply crisis becomes acute in late 2026 or early 2027 when above-ground inventories approach zero. You have maybe 12 to 18 months before this trade becomes obvious to everyone. Before Wall Street wakes up. Before your neighbor starts asking how to buy silver. Before governments start talking about strategic metal reserves. Step 4. Consider silver miners, but be selective. The leverage in mining stocks can be enormous if silver goes to $100 or $150. But you need to own the right miners. Look for companies with these characteristics. Unhedged production so they benefit fully from rising prices, primary silver mines not byproduct, and jurisdiction safety in stable countries with rule of law. Step 5. Watch Apple's supply chain signals. Monitor the quarterly earnings calls. Listen for mentions of component constraints or supply chain investments. When Apple starts talking about long-term supply agreements or strategic stockpiling, that's your confirmation that the procurement panic has begun. Let me paint you a picture of what happens next. It's September 2026. The iPhone 17 has been on the market for a year. Sales exceeded expectations. Samsung's Galaxy S27 just launched with similar specifications. Global smartphone silver demand has hit 200 million ounces, exactly as predicted. But mine production didn't increase. It's still 835 million ounces. The deficit for 2026 is now 350 million ounces. The COMEX vaults are down to 40 million ounces of registered inventory. The London Bullion Market Association is reporting unprecedented tightness. Premiums on physical silver have blown out to $15 over spot. Apple's procurement team is getting worried. They've secured most of what they need for the year, but at prices significantly higher than budgeted. They paid an average of $85 per ounce, not the $64 they planned for. That's still manageable, but the trajectory is concerning. Then in October 2026, a major silver mine in Mexico faces labor strikes and shuts down for 3 months. That's 5 million ounces of supply that suddenly disappears. The spot price gaps from $78 to $92 overnight. Physical premiums hit $20. Dealers are sold out of everything. Mints can't get enough raw silver to produce coins. Apple's CEO gets a call from the head of operations. They have a problem. Their silver supplier can't deliver the contracted volume for Q1 2027. They might need to slow iPhone production. That's unacceptable. The CEO authorizes emergency measures. Pay whatever it takes. Secure 6 months of inventory and find alternative suppliers. This is when the paper market breaks. When Apple and Samsung and Tesla all start bidding against each other for physical metal, the COMEX price becomes irrelevant. A two-tiered market emerges. Paper silver trading at $95, physical silver trading at $140. The spread represents the premium you pay for actual metal versus a promise of metal. Governments take notice. The U.S. adds silver to the critical minerals list. They implement export controls. China retaliates by restricting silver exports. The global supply chain fractures into regional markets with different prices. By 2028, silver is trading above $200. Not because of inflation, not because of investment demand, because industrial consumption has created genuine scarcity. The laws of physics have overwhelmed the manipulation of paper. And the iPhone 17 is still selling. Apple is still making massive profits. They adapted. They secured supply chains. They locked in long-term contracts. The people who got hurt were the ones who assumed silver would always be available, who waited too long, who trusted the paper price. I know this sounds extreme. I know it feels like I'm exaggerating. But look at the numbers. 835 million ounces of supply. Over 1 billion ounces of demand. 325 million ounce annual deficit. These aren't my numbers. These are from the Silver Institute, from industry analysts, from Apple's own technical specifications. The iPhone 17 isn't just another smartphone. It's the tipping point. It's the moment when silver transitions from a commodity to a strategic material. When tech companies realize that silver scarcity is a bigger threat to their business than any recession or trade war. You have a choice right now. You can ignore this information. You can assume the system will somehow produce more silver. You can wait for mainstream media to tell you it's safe to buy. Or you can look at the evidence, understand what's coming, and position yourself before the crowd figures it out. Apple just confirmed the silver death blow. The question isn't whether this is happening. The question is whether you'll be ready when it does. Take action now. If this analysis opened your eyes to what's really happening in the silver market, share this with someone who needs to hear it. Subscribe to stay ahead of this story as it develops. Comment below and let me know. Are you buying physical silver before Apple's procurement panic hits? Or are you waiting to see what happens? Remember, Apple doesn't wait. Samsung doesn't wait. Tesla doesn't wait. The people who act early get the silver. The people who wait get the shortage. The iPhone 17 launches next month. The clock is ticking. Stay informed. Stay prepared. And whatever you do, don't bet against the periodic table.